It is time for a price prediction video for AMC stock this upcoming week, and it is going to be a jam-packed week. Can we even call it that? We're going to have Fed Jerome Powell. We're going to have that FOMC minutes. We're going to have consumer spending data. We're going to have so much data, it's going to be ridiculous. Every single day besides Monday, you're going to be hit with a lot. And the markets are probably going to have a pretty hard time digesting this. I do think we should see a slight bullish reaction in the overall markets, but I think you're going to see a monstrous bullish reaction in AMC stock. And I want to go over exactly why that is and hopefully provide you guys some context to why I am saying this. And I want to let you guys in on how I plan to trade this upcoming week throughout the next couple of weeks. Now, a lot of my bullish thesis comes down to this executive order that does go in effect January 2nd and January 3rd. That was their sole reason, the main reason, I should say, not the sole reason, it's the main reason why AMC stock rallied back in January and it rallied in June. It all comes down to the executive order about the Chinese securities. So we are going to get into all of this key information. If you guys find value out of this video, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, come join us on the live stream tonight, 10 to 11 p.m. Eastern Standard Time. We will be live to go over all of your questions, go over anything you guys want to talk about, look at the futures, talk about the markets, all that good stuff. So come join us. It is always a blast. If you guys want to support the channel and get access to all of my trades in real time, link down below in the pinned comment to do so for that one. You will find a link to the Patreon, and then you will have instructions on how to actually join the trading community. So let's talk about exactly what's going to be happening this week. We're going to run through the economic calendar. If you guys have not seen this, I've talked about this, I believe, in the last video as well. We have a lot of things coming up, and I don't necessarily want to focus on all of this too much, but I will give you guys kind of my conclusion to what to expect from all of this market data that we will be getting. So on Monday, we don't really have anything coming out that's going to be important. You do have Fed Bostic. He does speak at 11 a.m. I believe this is still set on Central Time, so I believe it's around noon Eastern Standard Time for a little bit of context there. Fed Bostic, he does speak. You do have some 3-month and 6-month bill auctions. Those are for treasuries, and that can move the markets, but it's not really like a day-long market-moving catalyst. Usually when the bond auction results come out, you'll see a big rise or fall in stocks and bonds. That tends to happen, but it doesn't really set the tone for the day, if that makes sense. Now, on Tuesday, you do have S&P Global Services PMI. You do have new home sales. That could be important for some real estate stocks. But most importantly, you have Fed Chair Jerome Powell that speaks at 11:20 a.m., a 2-year no auction. You have ECB speakers. Those can actually be very, very important. But the main thing Tuesday will be new home sales. But most importantly, Fed Jerome Powell. Every time he talks, that is going to be a big market moving catalyst. But now on Wednesday, you get more data. And from really Wednesday and Thursday, even a little bit Friday, but really Wednesday and Thursday, you are going to get overloads of data. Like, I don't even know how the markets are going to process all of this data. And really come to terms with it all coming out basically at the same time. But 7:30 in the morning, you have durable goods orders month over month. That is going to be a high volatility expected catalyst, and that's going to be very important for the state of the consumer. It goes without saying, durable good orders month over month, very important when you're looking at the consumer for the possibility of a recession. You have a lot of mortgage data that does come out at about 6 a.m. as well. 7:30, all the durable goods data that comes out. You have gasoline and oil data that does come out at about 9:30 as well. You have Fed Brainerd that speaks at 11:15 a.m. And then you do have the FOMC minutes that comes out at about 2 p.m. Eastern Standard Time. That's going to be the biggest catalyst of this upcoming week. We are going to get the transcript of their last Fed meeting, essentially what they plan to do. And I will elaborate on this in just a second because that's going to be very, very important. But for Thursday, you do have GDP growth rate quarter over quarter for the second quarter, initial jobless claims, corporate profits, GDP price index, continuing jobless claims, core PCE prices quarter over quarter, PC prices year over year, GDP sales, pending home sales. You have a lot of bond auctions, and that's going to be a jam-packed day for data. All of that data pretty much comes out at 7:30 in the morning, and then you do get the pending home sales year over year and month over month that comes out at 9 a.m. So lots of data that comes out Wednesday and Thursday. But the FOMC minutes, like I said, you're going to get the transcript. And in a weird way, after Target and Walmart, if the Fed acts more aggressively, you might actually see the market start to like that. Hear me out here. The retailers, the guys that should be able to pass on inflation, they are taking a hit. Target took a 52% drop in net profits year over year because of what? Inflation. So if the Fed shows they want to get this thing done fast, if they want to knock inflation out, if they want to rug pull us and get this thing over with, then you can start to look at long duration assets a little bit differently. That's why during this market sell-off that we have been seeing, and when we're getting new economic data or like target earnings, things that, kind of show that possibly we're at the peak of inflation, the 10-year treasury yield does tend to fall. And it has been falling off of its peak in a pretty big way. And what this is long duration. And what long duration means is it's going to take a long time to get fully paid out. Like your growth stocks, those are long duration growth stocks. We will be going over, on that note, 5 of my top stocks that I am buying right now that are really like 5 or 10x's here in the next 3 to 10 years. But those are long duration stocks. So once you get people's expectations of inflation is going to get beaten into the ground and the long-term outlook has us back at 2 to 3% inflation, you can start to look at growth stocks again. And what controls the markets? Growth stocks. So the longer inflation drags out, it's actually very bad for the stock market. At this point, I feel like if the Fed came out and did a 1% rate hike, sure, the markets might freak out for a day or two, but after they realize like, hey, this is going to get inflation under control, we can buy long duration assets that maybe aren't profitable now, but they're going to have a massive profit in the future. Inflation is not going to eat away those profits. That's why the markets would rally off of that, because they would stomp out inflation. That's a real problem for everyday Americans, right? The whole concept of a recession in 2022 or even 2023 is not because, there's bad economic activity. Quite the opposite. There's so much good economic activity that prices are going up at astronomically high paces and the consumer cannot keep up. That's what is really going on here in the economy. It's not that there's any systemic problems. It's because the price of food, the price of gas is going crazy. So you make smarter decisions what to do. You don't go out to that movie or you don't go out to do XYZ because it's going to cost you $30 in gas to go do it, right? So the faster the Fed gets inflation out of the way, I think will be a bullish thing for the markets, bullish for long duration. And I know some people are not going to understand this, and I know some people are going to comment down in the comment section and then say I'm full of shit or don't know what I'm talking about. Been in the markets for a very long time. This should make some sense to you. If it does not, then I will tell you, look at long duration. Inflation eats away profits. So if SoFi or AMC was expected to make $1 billion in profits by 2025, but inflation's 8% per year, well, that $1 billion is going to be worth a lot less by 2025 because of inflation, right? So it changes the value of companies. Whereas if you have stable or lack of inflation like we've had over the last 10, 20 years, well, what do you get at that point? You get pretty consistent expectations for what your dollars will be worth in the future, what a potential company will be worth in the future. So the longer we drag this out, if we have 5% inflation year after year after year after year, good luck seeing stocks recover. It's not going to happen in a substantial way. If we take a 1 or 2 month hit to the stock market, I mean, we took a 6-month hit now, but you guys get the idea. If we take a 1 month hit to the stock market or even a couple day hit to the stock market, if the Fed does quote unquote rug pull us, you will have much higher returns after that comparatively if they don't raise rates more aggressively. Just a thought. Fed's probably not going to do it, but it would end the pain a lot faster. It would potentially cause the markets to bounce. So in a weird way right now, if the FOMC minutes actually came out more hawkish, investors, they might react negatively at first to it. But I firmly expect the markets would say, hey, this is actually a bullish thing. If you guys don't understand, that's probably the best I could do actually explaining it. But I know some people are going to comment down below. So please comment down below. Let me know I'm a dumbass if you guys don't understand. I'll try to do my best in typing this out. But nonetheless, that's what we have for this week. And I do think it will be bullish for the markets because I do think the Fed will be ultra hawkish. And on Friday, you definitely seen some shorts covering with the S&P and the NASDAQ crawling back almost 2% of losses. Intraday, NASDAQ was down 2.5%. NASDAQ recovered like 2.3% in the last hour and a half of trading. So you're definitely seeing a strong shorts covering kind of rally. And I think that is because of all the economic data we have for this upcoming week. Typically, on a Friday in this kind of market environment, you wouldn't see people rushing out to cover their short positions. But when there's a possibility that we get good news this upcoming week, that's why you've seen the rally back on Friday. It wasn't because there was news, wasn't because there was anything new coming out. The situation's still as bad as it was intraday compared to now. Hasn't gotten much better, but when you're down 20% in the S&P and you're down 30% in the NASDAQ peak to trough, you got to look at the markets in a different way. There has to be a bigger reason to continue to sell stocks off, especially some that are around 60, 70, 80%, like the ones we're going to talk about later on today. Come watch that video. That video might make you guys a lot of money. I know it's not going to get a lot of attention. It's people probably aren't going to want to watch it, but those of you guys that do, I strongly believe you will be rewarded just by the information and knowledge that you do learn out of that video. But nonetheless, you guys got my bullish thesis and exactly why I think it's bullish. So shouldn't be any questions there. But nonetheless, we have this executive order coming into effect on June 2nd, June 3rd. We're going to be heading into trading on Monday, so obviously the 23rd. And that doesn't give us a lot of time before the executive order actually does get implemented. And what we typically see with this executive order before it gets implemented, AMC stock usually doubles the 2 weeks before the executive order goes into effect. And then once it does go into effect, that's when you start to see these 25, 35, 40% days. And then what you have seen in the past, the day the executive order actually went into effect or got retracted, like we've seen right here, June 2nd, was a 95% day, June 2nd, and back here in January 27th, the day it was actually implemented, you had a 301% positive day, seemingly out of nowhere. So I think the executive order is actually a very big deal, and I think we will get a rally heading into the executive order. If I'm wrong, obviously it's probably because, Citadel and the algos pay attention to what is said here on YouTube. Kidding, not kidding. But I do either way expect to see a substantial move. And I want to take you guys to the option activity that we did see on Friday, especially close to the bell. This option came in 6 minutes before trading closed, and it does have a January 20th, 2023 expiration for a 145 strike, for a 145 call, and it was for about $43,000. They bought 445 options for $97 a piece. This is substantially out of the money. If AMC 10x'd from value in here, it would only go to $128 per share. Like it would still be way out of the money. And this option only has about 6 months left of time. So really now Theta is going to start killing this option the longer it stays down. Give it 2-3 months from now, if AMC does not make multi 100% moves, you're gonna lose on this option. And no matter what the size of a hedge fund is, they don't like to just throw money away. That's not really what hedge funds like to do in the business. It's not good to just throw 40, 50,000 around and just play with it, right? So you're definitely seeing people expecting to see a very large move, especially because they got into this order the last 6 minutes of trading. So actually quite phenomenal what we've seen right there, and a lot of call activity overall that has been going on to the option chain. And if we do look at the interesting flow sentiment on Friday, 9 orders totaling $8.16 million, positive order value of 97%. Over the past 1 week, 98 orders totaling $32.05 million, positive order value of 89%. So I think if it could even be any more obvious, I'll just point you guys to what happened last time we seen option activity like this. The stock ran up 200%. It went from $12.90 per share all the way up to about $34.33 per share at the peak before it was actually halted. That's what happened last time we seen this kind of option activity. So I don't think it's too crazy to expect a similar move, if not a much bigger move, considering this executive order and what has actually happened in the past, causing the January rally and the June rally, where AMC stock essentially 10x'd. So if AMC 10x from $12, you're sitting at about $120. Obviously, I don't expect that to happen this week, so do not be confused by that, but I do expect the stock to make a move, which we'll talk about the price target right after we go over the short interest. So, short interest of free float, 22.07%, current shares that are sold short of 113.77 million, cost of bar max of 4.33%, utilization of 100%, and the days to cover sitting at 3.22. Shares out on loan is still at a record high at 159.86 million. So, all of the data here, looking better than ever for a short squeeze, even if you consider all of the option activity that is currently on the option chain that has consistently weighed down AMC stock. If we do go ahead and pull up the Stocko tracker data, you'll see an incredible amount of puts that are in the money. Especially this last week, 90,000 puts that expired in the money. That's a lot of shorts that the market makers have to go out and short. And if you look to June 17th, which is going to be, I think, the next big option expiration, well, I could pretty much tell you for a fact it's going to be the next big option expiration. Even if we do start to get like a gamma squeeze or something along those lines, a lot of people are going to go out and buy the June 17th options comparatively to these, weekly options, right? And you do have puts in the money of about 97,000. That's about 9.7 million shares that are likely hedged out for right now, which could potentially turn into 9.7 million shares that have to be bought by the market makers if this stock does go up in a dramatic way and really start to break out above 15, above 20, above 25, above 30. You're going to see pretty much all of these puts run out of the money. So that's going to be very good. At the same time, you have about 3,000 calls that are in the money, 195,000 calls that are out of the money. So a lot of potential room there to see a lot of buying power. So that is that. A little bit of an overview of the option activity. It's very important, as you guys know, but I don't want to waste too much time elaborating on that. I believe this is already going to be a pretty long video. Now, as far as a price prediction for AMC stock, it obviously is based somewhat around the overall markets. I do think the markets will be bullish, but I do like to give you guys a good and bad scenario. If the FOMC minutes do indicate the Fed is looking to do like a 1% rate hike, I think the markets will freak out. I think you will see a short-term freak out. Potentially, the markets probably will hit lower lows, and that is to be expected. But I think AMC stock would hold up support around $10 per share. And if we don't start the rally this week, I certainly think we would start the rally next week, because I believe June 2nd, June 3rd is not obviously not this week, but I believe it will be, it's not next week either. So yeah, so we have 2 weeks, 2.5 weeks before that executive order actually does go into effect. So if we don't start the rally this week, it'll likely be next week, but I do think we will see a substantial move up, likely to about 17, if not to about $20 per share. That's kind of what I expect, considering earnings were good. And if we can see an overall market bounce, a lot of the stocks that have been beaten into the ground will really see phenomenal rallies. And I would expect to see AMC stock in between $17 and $20 if we do have the first positive week in 8 weeks in the stock market. This is the worst we have seen since the year 2000 during the dot-com bubble. You didn't even see a stock market this bad during 2008. Put that into context. So any bit of good news this upcoming week is going to be very good for the markets. Any reason to buy the dip is going to be really, really good. Now, if everything is bad, expect $10 per share. That's just going to be the key support level. We hit $9.70 per share, retraced from there. We did not close under $10, slightly above $10, and that is a very good sign for a level of support. And I think we will see a lot of support around $10 per share. Nonetheless, MACD is pretty neutral. RSI is severely oversold at 37.90 or 69. So we do have a lot of room to go to the upside before we could even talk about being overbought, and that would probably put us in between that $17 to $20 range. And I think that's personally what is on the table for this upcoming week. Especially, you're seeing Ray Dalio, you're seeing Citadel doubling their net exposure to AMC, their long net exposure. You're seeing a lot of firms, the Swiss basically Fed now owns 3 million shares of AMC. You're seeing a lot of option activity. You're seeing a lot of buying activity from a lot of guys that are not willing to just throw around money. So I think it's clear. I think the writing is on the wall, and I think I am stating the obvious here. But nonetheless, if you guys found value out of this video, hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Like I said, come join us on the live stream tonight, 10 p.m. 10 p.m. to 11 p.m. Eastern Standard Time. We would love to have you over there. Come ask your questions. Come tell me I'm a dumbass if that's what you think. I know I'm sticking my neck out on the line to even make this video here, but I'm going to say what the data is telling me regardless of who likes it or who doesn't. And if you guys want to come trade with me live in real time, link down below in the pinned comment to do so for that one. And I know I told you guys the trade, what I would tell you the trades that I do have on AMC. And if you made it to the end of this video, here it is. I have 3 options now for June 10th. For the $20 strike. And I decided June 10th because if the executive order does go into effect like it's supposed to on June 2nd, June 3rd, that's going to give you the rest of that week and that next following week to see that actual rally come into effect. And I think it will happen in that time frame. So that's currently what I have. A small amount can go a very long way, but if we get more confirmation that it's actually going to cause a major rally, obviously I would be looking to buy more options. Like I said, if you guys want access to all of my trades, link down below in the pinned comment. But nonetheless, you guys enjoy the rest of your day, enjoy your Sunday, and I will see you in the next one.